think the key thing to acknowledge is that every technology is different and every technology is at a different stage of development, so the policies will differ. But generally what investors want is simplicity and reliability and sort of consistency of policy. Europe's fortunately had a lot of great successes in a lot of things. The green certificate regimes have worked in some places. The feed-in tariff regime has been tremendously successful. Allowing those for most technologies works well. For most renewable energy technologies, they're all about upfront capital expenditure and very low operating costs going forward. The feed-in tariff fits those type of assets very well, and that is exactly what you need to unlock most investment capital. The pension funds, insurance companies, those are the people that are going to rebuild our energy network going forward, not the utilities and not anybody else. They're the only people with that sort of capital. And it's pretty clear when you speak to any of them that they love those types of investments. They just need to know how, and all government needs to do is offer them and keep them. You know, super returns are not what people are after. Basic, simple regulation that doesn't change every week would be really helpful.
So the government should add a different policy. That one is consistency.
Yes, I think the key thing is that the feed-in tariff regimes, for example, were designed to fall over time, but it shouldn't be too difficult to do that in a fairly organised fashion, or for people worried about the cost to auction off, to improve the efficiency economically of it for all the sort of liberal economists out there, auction off the feed-in tariffs when they're awarded and leave them flat for 25 years. In the future, that may well be the cheapest form of energy that we have, and that will give the market confidence that this is not just some kind of random subsidy, which is unfortunately so overt compared to all of the conventional energy generation subsidies that are hidden and people don't realise.
When will renewables be more important to investors than conventional energy sources?
Well, certainly I think for financial investors they're more important now. For financial investors, you can invest directly or semi-directly through funds into renewable energy assets. In Europe, for example, most of the new assets built are renewable energy assets as opposed to conventional energy assets. The only way you can really invest in conventional energy assets is by buying shares in big utilities, which is a very different investment and something that is seen now as having a lot more risk than people might have thought in the past. I mean, all the big utilities have oil and gas operations, exploratory activities. It's not a safe bet. For most financial investors, renewable energy is already the future. It just takes them a little while to understand exactly how to do it.
What are the biggest dangers for your strategy?
Because renewable energy assets are so simple and so easy to understand, generally speaking, the only thing investors are left to worry about is government regulation and how strong and how supportive that is. Generally, it's got a tremendous track record, but the odd blip here or there, or a lot of the noise created by changes in feed-in tariff changes, affect things greatly. All investors really need to see is a bit more foresight and a bit more knowledge so people can plan their businesses. That fundamentally, that chopping and changing of regulation and really quick adjustments to feed-in tariffs, that's the only risk that most investors really come back to and is the final issue of whether they're going to invest in this or not.